What's up, guys? What's going on? So, my name is Amol. I am part of the Cryptosomniac community. I don't know if you guys know me from the channel, the Discord channel, my trading view videos, or my YouTube. I'm one of the head analysts of the Cryptosomniac community. I also own my own investment fund, Pegasus Digital Asset Investment. I am the managing partner of that fund, and I'm also co-managing another fund from Australia. It's DigiChain Capital. And I've been trading and investing in the equity markets for about 10 and a half, 11 years now. And I got into crypto about a year and a half ago. So here I am helping the community out, doing my analysis as best as I can to give you guys valuable input to make your own investment and trading decisions. Again, this is not investment advice. This is what I'm doing to help the overall community hopefully make better decisions for yourself and your portfolio. All right. So if y'all have any more questions, shoot them my way, either in the Discord channel or type the comments in below. Okay. Let me see if there's people that have joined just to make sure that everyone is seeing this video. All right, let's see. Okay. If you guys see my video, audio is good. Can you guys give me like a thumbs up or give me a comment or something so I can see? Let me step away 1 second. Hey, what's up? Hey, I'm already live on YouTube, guys. I gotta go. I gotta go. Alright, bye. Sorry about that. Yeah, if you guys see this, please give me, oh, yeah. Wait, your screen is funny. Oh, yeah, sorry. Is my screen good now, guys? Can y'all give me a thumbs up, a comment or something? Is this fine? Can you guys see everything? All right, I'm just looking down at my other monitor. All right, DB says all is good. All right, everyone. Awesome, thanks for joining. Again, my name is Amol. I'm the head analyst of the Cryptosomniac community. I'm also the chief investment officer of Pegasus Digital Asset Investment. I'm also co-managing DigiChain Capital, which is a firm in Australia. And I am here to just do a YouTube video and hopefully, alleviate any stressors that you guys may have regarding this market. And hopefully you take this and make better decisions with your portfolio, with your investments and your trades. Again, this is not investment advice. Do your own research. But if you have any questions for me, shoot them my way. Find me in the Discord channel or ask them here. Okay? All right. Let's get right to it, okay? 4-hour chart, Bitcoin. I told you guys that we were seeing this rising wedge through this entire move, right? Best case scenario I mentioned to y'all was, we were going to get blocked somewhere in this resistance. If you guys remember about a month or so, way back here around July, I had told you guys that, we could potentially move up till this descending trend line right here and then come down, okay? And my target was $7,400, and I've been saying that for a while. But I'm pretty sure we hit, the target on the mark. Now again, guys, technical analysis is really not about predictions. It's more so about probabilities and being able to look at the charts and basically see, okay, where exactly are certain resistance levels, where are trend lines, where are Fibonacci levels, other indicators, sentiment, all these things, in combination give you an idea of what is happening or / going to happen in the price action. Okay, so that kind of gave me a target of $7,400. And I told my community that, 7,400 was my max target. If we move up, best case scenario, we're probably going to get blocked in this resistance area, 75, 7,600 zone max, and then come down again, okay? Which we ultimately did. Now, I wanted to show you how exactly we did come down and what sort of reasoning was there behind this, massive drop in volatility, right? So when we move up in this rising wedge, right, we already know that there's this big bearish pattern being created. Rising wedges break to the downside, okay? These patterns, they go like this, they go like that, and then they break down, okay? Those are how rising, probability-wise, rising wedges break to the downside, okay? They're bearish patterns. So I knew that for the most part, this rising wedge right here was going to break down. When exactly? I sort of had an idea, right? $7,400. We were coming up on top of that rising wedge, and I was thinking that, okay, you know what? If we move, we're going to shoot up to 7,600 and then come down. But then we didn't, even blink, and we just dumped a bunch of candles on the way down. So why exactly is that? Well, let me teach you guys about, how liquidity is essentially manufactured, okay, and artificially created. All right, so this entire move up, right, while we're moving up sideways and, in a nice 45-degree angle, it's a nice healthy move, right? Typically in markets, you want to see a nice 45-degree angle move. But then, what I started seeing was, movements similar and reminiscent to the past. And also, I started seeing shorts become more and more resilient in the market. Let me pull up a shorts comparison, okay? Bitfinex US dollar shorts right here. Where'd they go? Let me see where that is. Oh, there we go. Oh. Okay, so here are the shorts, right? In this move right here, okay, in this move right here, right? Man, this is a terrible chart. Gosh, I can't do anything with this. Let me see if I can clear this up real quick and create this now. There we go. Okay. This is a daily chart. That doesn't give me anything. What in the world is going on right now? Okay, there we go. So here's that move, right? All the way down from that grind of $5,800 all the way up to $7,400, right? So the shorts back here, there was a nice low in the shorts, and then they climbed and climbed, right? And then what happened? While in this entire move, right, the shorts still did not dump down farther, okay? So that told me that, from this low, we essentially created a higher low. And so that means that, okay, the shorts are still pretty confident that Bitcoin price is eventually going to go down. And then when you see right around this date, right, 31st of August or September 1st, you see that there's a massive spike in shorts. So what exactly happened? Well, that just means that someone big or multiple entities loaded up big on shorts, right? And then they continue to load up even on this day right here. And then what I would suspect is they also loaded up on longs. So why do you load up on longs, right? The reason you load up on longs is because what you're trying to do is you are going to market sell your longs on this day. And when you market sell, you create a panic in the market. But remember that you already loaded up on all these shorts all the way up, okay? So when you market sell, yeah, you might lose a couple $100 on this candle right here. But man, your bets paid off big because you loaded up on all those shorts, okay? And when the price went from here all the way down to here, whether you're a 1x, 5x, 100x, I mean, you made a big amount of money, a lot of money, okay? So, this is how you essentially create big moves like this. You artificially create them by buying up both the shorts and the longs, but knowing that you're actually going to hold the shorts and dump the market longs and create panic. So that's kind of how that works, okay? Your audio volume here is better compared to your TradingView videos. Okay, fair enough. I will try to improve on those TradingView videos, RMX 13. So yeah, guys, I just wanted to explain that to you because, a lot of people have a misconception of exactly how markets move. And again, guys, I've been trading and investing for, over 10 and a half, 11 years now. And one thing I could tell you that I have never seen more sinister and manipulated markets like I have in crypto. I mean, it's on a whole different level, honestly, guys. So I urge you guys to be careful in this market, be vigilant. If you're not part of the crypto Somniac community, please join the Discord channel. I'm always there. Jordan, our other analyst, is always there. Jason and James are always there. We're always there to help, okay? All right, back to the analysis, guys. We're seeing a pennant here being created along. This is pretty much like a big old, bear flag, bear pennant. But this specific move right here, where this U shape was created, this is essentially a symmetrical triangle. This I do expect to break down. And even if it breaks up, I mean, the height of the upward break will probably be somewhere around here, maybe 64.81. And if I were a betting man, what I would do is I would short in this area and probably hope for the market to dump it again, because I ultimately see this entire move to be setting up for a larger move on the way down, okay? I do expect this low to be taken out. And I told y'all back here around July that the low of this corrective move was supposed to be 5,500. I was wrong, and I'm okay with admitting that, because I definitely did not see this stretch up. But what's happening really, guys, is, I want to show you guys something, okay? Let me pull up a chart here real quick. This entire sideways movement, okay? 4-hour chart. Okay, so this entire sideways movement that we've had, pull up the daily. So from back here, right, we tried to break that $6,000 level. We could not break it. Again, we tried 6,400. We stopped. Again, we tried right here. We went down to 58, 5,900. We stopped. We came back here again, 6,000, 59, 5,800. We stopped. So what the bears are trying to do is they are knocking at the door of the bulls around the 6K marker. Okay, and they're really trying to break this area right here. Okay, so if I were to create the zone that the bulls are holding up, right, it would look something like this. Let's just take it up here. Okay, this is the entire zone that the bulls are defending pretty, valiantly, right? But the bears are knocking, and you know why I think that they're getting stronger? Well, look at this entire move. Okay. Every time we have touched this level, this red rectangular box, we have not bounced to all-time highs, but rather we've created lower highs, okay? So this move right here, first one in February, we went to 11.7K. Second time we came down again, we went to 10K. Third time we came back all the way down here, we went to 8.5K. Now again, we came down, we moved to 7.4K. So now we're back here again. So this move, I would expect it to be even weaker, okay? Probably respecting this trend line that's being created by the highs of February, touching May, and now essentially touching July and September. Okay, so I expect this trend line to essentially hold us down. And this large pattern that's being created, right? You guys see this pattern right here? That is a descending triangle, okay? Descending triangles break to the downside. They break to the prevailing trend, rather, okay? The prevailing trend is what? Since the beginning of December. It's down, right? So I expect this descending triangle to also break to the downside. And where is my target to the downside? Well, let me show you. If you guys have any questions, ask me, and I'm going to get to them. But let me just go through my analysis. I have a few talking points to get through. I don't have that much time today, but I'm more than happy to go through the analysis. Let me see. So here's where I had drawn up a structure of the market where I think that this is where the market will come down eventually, right? The $3,000 to $5,000 level. Specifically, my targets are $3,500 to $4,800. Maybe $3,500 to $4,500. but I'm hoping to raise that 300 bucks more, just because I'm not confident in just $1,000 range. There's also a decent amount of support right near 4,800 bucks. So anyway, why do I think that is the level we're going to break through? Well, let me take you guys all the way back in Bitcoin's journey. Okay, so here's Bitcoin's journey back in 2011, right? So these are this is a Fibonacci retracement tool, right? It's an overlay. If you guys don't know how to use that, please join our channel. I will help you guys out and learn how to use it and teach you guys how to use it, okay? So from the low of 1 penny to $32, right? Our first big bull run, we retraced almost 93% of the way, okay? Breaking this 786 Fibonacci. But if you look carefully, right? The 786 Fibonacci was actually used as support right here. I mean, it wasn't perfect, but it was good support. And then it used it as resistance right there. Let me zoom into this so you guys see a better picture, okay? So support right there, resistance right there, resistance for multiple weeks right there, and then eventually we broke through way out here, okay? So it took, from the top, right? We were in a bear market in June 2011. Bear market, until we went to all-time highs, which was probably back here. So in February 2013. So it was almost 2 years, okay? But we were in the bear market at least under the 786 Fibonacci from September all the way till here, July 2012. So September 2011 till July 2012. So that's, again, about like 10 to 14 months or something like that. Now take that again over here, okay, in the 2014 and 15 market, right? Again, we went from $65 to 1,181 bucks. And then what happened? Again, look, we used 786 Fibonacci as support once, twice, 3 times. We just ripped right through. Used it as resistance once, twice, 3 times, and then 4 times we finally broke through, okay? Again, this bear market, the definition of a bear market, in this case, we'll say that it's basically till the old high right here was taken out, okay, and beaten. So meaning about November 2013, and then over here, April 2017. So 4 years almost it took to take out those old all-time highs. Now I know that's kind of scary, but if you look at Bitcoin currently, it is on the same trajectory, right? However, the sort of acceleration that we've had in this market and the widespread demand, I think that might be a little bit faster, okay? And I think the middle of 2019 is where I see Bitcoin starting to pick back up. At least start climbing out of the bear market, and then challenging the all-time highs maybe in 2020 or 2021. Again, that's a pretty crazy, prophecy that I'm putting out there, but that's just how I see it. I don't really know if it's going to come true, but that's just if I were to look at the history of Bitcoin, that's kind of what I would say. Okay, but what does that mean right now, right? We're in this bear market. We've been in a bear market, and looking at this, right, we're currently right there. We are down about 68% from the all-time high, okay? There's a ton of good projects out there, guys, along with Bitcoin and Ethereum, that you now get to have an opportunity to buy at a discount. Instead of buying up here when all the noise and clamor was going on from the average retailers, you are now going to be witnessing a significant reduction in prices that you have never before seen. Okay, these coins are going to be as cheap as their ICO prices, maybe even cheaper. And if you really believe in projects and you really want to trade and invest in this market and you're ready to go through the mud for the next few months, now is the time to really think about investing, right? This is the perfect time. Why the hell would you want to buy at 20,000 when you get to buy at 6,200 or 6,100, right? Same with Ether. Why would you want to buy at 1,400 bucks when you could buy it for 190? You know, this is where the legends are made, guys. You know, they're not made by anyone who bought Bitcoin at, you know, 10K or 15K and sold at 20K, or even like sold at 6K at a loss. The legends are made where you believe in the market and you're thinking of longing the market, and you keep buying and dollar cost averaging, and you buy and hold, and you keep, you know, essentially reinvesting your profits on the way up. Okay, that's kind of how you win at markets like this. Am I doing okay, guys? Can I get like a comment or something? I don't know if I'm just babbling on. I'm sorry. I'm really not that used to doing YouTube videos, so I kind of just do my own thing. Let me get like a thumbs up or comment or something to ensure that you guys are seeing the video right and you're hearing my audio. All right. Okay. Awesome. Zevex is here. Ryan Jack. All right. All right. Okay. So let me just go through a few more things, guys. Okay. So analysis-wise, let me just get through that, and then we could start talking about Bitcoin futures in my presentation that I did for the Cryptosomniac community. So let me pull the 4-hour chart up real quick. Okay, guys. So on the 4-hour chart again, you know, I am still fairly bearish on this chart. I mean, everything about this chart tells me that, you know, we're on a we're printing basically like a large, you know, bear flag, and we're also in the midst of creating a large head and shoulders. Okay, and let me show you guys how that looks. So here was the left shoulder right here, created in the small move at the end of June and in the middle of July. And then here's the head, okay? Head and shoulders patterns, guys, are bearish patterns, okay? The inverse head and shoulders, however, are bullish patterns, okay? They break to the upside. So in this head and shoulders pattern, you have to look at where the neckline is. Okay, the neckline to me, this pattern that I drew is right around $6,000. Okay, now typically when the neckline breaks, okay, you take the size of the head, right? This size right here, which is like, I don't know, like a $2,400, $2,500 move, and you point that to the target to the downside. So what would that target be, you know, from here? 6,000 down 2,500 bucks. You know, it's about like $3,500 to $4,000, right? But again, I don't think that's going to happen in one fell swoop. I think this market is, you know, going to continually break down, and then eventually we'll just have a sideways movement, like we did back in 2014, and then we're going to start, you know, ticking up the middle of next year. Okay. Snay would like to look over Ripple. Oh my God. Yeah, we'll look at Ripple in a little bit. Okay. So daily chart, guys, again, still looks heavily bearish. Weekly chart, also massive bearish engulfing candle. Bearish engulfing candles are basically it's a candle that absorbs the body completely of the preceding candle, meaning this is a bearish engulfing because this candle from the top to the bottom engulfs this candle. That's, you know, engulfing meaning like completely consuming as a whole, right? So this is a bearish engulfing candle on the weekly, and now that we're printing the succeeding candle, I would expect this candle to start breaking to the downside, but again, we still have about 7 more days left in this candle, okay? All right. There's another thing that I wanted to talk about, which is what exactly is necessary for the next bull run, right? And I've written this in my community before, but I want to harp on it a little bit more because I don't think people realize that what it takes for a market to mature and what it takes for prices to start moving in the bullish direction, okay? So basically, guys, you know, we need to start making exchanges safer for investors, okay? What I mean by that is, you shouldn't be scared of your account getting hacked, of your money being stolen from your Mu wallet, or whatever small insecurities that people have regarding their funds. That should not really be there. Okay, and more adoption and true adoption will come when you don't have something like that scaring people. Okay. More regulation needs to come in, right? The government needs to recognize that this is a market that's here to stay. Companies are not just bullshit scams. ICO projects are not just garbage scams. Some of them are actually doing something. They're trying to solve a real world use case. You can't just have a fucking $1 billion valuation and not do shit with your project. Sorry for the curse words, but like honestly, some of the garbage that's out in the space deserves to get shorted to zero, right? And I promise you, I will absolutely be shorting some of these projects down to zero. But the thing is, I feel bad for the average retail investor, because I know how it feels to put your hard-earned money into this market and realize, day in and day out that people are trying to shill you more of their coins and make sure that there's still buyers and suckers willing to buy. So I urge you to be careful in this market. I urge you to read more and empower yourself more with more knowledge. Join, our Discord or any other Discord or Reddit, whatever, right? And just really read about the projects you're invested in. Really see if they're actually doing something, or are they just blowing smoke out of their butts, right? But yeah, I feel bad because I was in a position, when I first started trading around 2007 and 8, where I didn't really know what I was doing. I mean, I basically, took money out of my dad's account and started trading with his money. And, I thought I was hot shit and I lost a bunch of money. But then after that, I realized a valuable lesson of, what it took to like really earn that money. And I really learned how to trade and how to invest. And it took time. It took a long time. So don't think that, you can come into a market like this and start, making your 2x, 10x, whatever. That time is gone. You're in a bearish environment. But remember, there's still money to be made in this environment. Especially if you invest in long-term projects, you are going to be, a happy camper, maybe 1, 2, 3 years from now, because you will tell someone that you bought Bitcoin at 6,000 or 5,000, and you bought Ether at like 150 or 200 bucks, while Bitcoin then might be 50 or 100K, and Ether might be like 4 or 5,000. So anyway, going back to my rules, strong catalyst is needed. Things like the Bitcoin ETF, that might need to get approved by the SEC, but before that can happen, again, we still need cleanups of the garbage ICO projects. We need to clean up fraud and manipulation in the market. We need more mass adoption from retail consumers and corporations. We actually need to see people using Bitcoin, people using Ether, Litecoin, anything, for that matter. When is the last time you actually went to the store and you used, crypto in any way, right? When is the last time you used crypto anywhere? I mean, it's really not happening, right? But it slowly is. When I was in Japan, there were coffee shops and restaurants and, stalls that were accepting crypto. Same with South Korea. So it's slowly happening over there, but it needs to happen more in America. And it needs to start happening over the world, Okay. Panic and capitulation needs to bring the price down significantly. I do expect at some point, again, we're going to see these big bearish candles for maybe a few weeks, kind of like we did over here, and then ultimately bring the price down to my level that I like, the $3,500 to $4,500 target, and then I'll be happy. More retailers need to have direct fiat on-ramps. That's obviously necessary because, the average American, guys, doesn't know how to, American or, any person anywhere in the globe, right? They don't know how to go about and buy Bitcoin or Ethereum. I think there was a study that came out the other day where only 8% of Americans actually know or are invested in cryptocurrencies, right? So that leaves like the other 92% of Americans. Obviously half of those aren't even going to invest, but there's still a lot of percentage to go, right? A lot of the population needs to actually understand why this industry needs to be invested in or adopted in their day-to-day workflow, okay? And then last but not least, get the weak hands out of the market. We need to get rid of the suckers who don't really believe in this space, and they're essentially trying to trade when they shouldn't be trading at all. That's kind of why, I started a 30-day, completely open and transparent trading program in our Discord channel. And it kind of looks something like this. Oh, yeah, this is how it looks, okay, guys? So we have calls that are given. Again, not investment advice. I created an Excel sheet. Today was this call right here, Dash. If you join our channel, you can see that call. We also have short-term and medium-term channels. This is only, us purely doing analysis. If you want to come join, yesterday or a few days ago, we closed a trade at 1.1% gain. We also have a margin trading channel right here. Looks like that. James, our head analyst of that, he will always answer your questions regarding leverage or margin trading. Okay? Awesome. Let me look up the questions if you guys have any. Holochain. I don't really know about Holochain, guys. I haven't been paying attention to alts that much just because there's very few on my radar, to be completely honest. And Holochain is actually not one of them. But if you want me to look into it, I will at some point. So are you waiting to buy under 6K, Ivan Paredes? Yeah, I'm actually, Ivan, I'm trading very small amounts of my capital right now. And if I am making trades, as always, I set a tight stop loss. My risk management and minimization comes anywhere between 1% to 4% probably. It's just how I trade. Other people have different strategies. Icon, did you pay directly from your wallet? Okay. I don't really know what Shift debit card is. What do you predict the low of Stellar will be? Let me look up Stellar real quick before I get into my Bitcoin futures. Stellar. Let me look up Stellar on more voluminous exchange. There's Binance. There it is. Yeah, Stellar also looks to be in this big, descending triangle. I mean, these levels right here, guys, this level right here where it's at right now, it's clearly a reactive level because every time we've touched it, like back here, we've reacted pretty strongly to the upside. So I would expect at least a little pop from here, but nothing significant. It's not going to be like the start of your next stellar bull run. It's probably going to be like a 30-40% move maybe. But if that, because again, you have to look at Bitcoin, right? There's no point in charting alts because everything is derived from the king, and that is Bitcoin, right? So you have to see exactly how Bitcoin is moving. And as you can see, I mean, if you look at this chart, right, you know that this is a clear uptrend. Even like a second grader could tell you that, right? But you also know that this chart is pointing down this way now, So you have to be able to identify simple trends and accept the fact and the reality that we are in a bearish market. And if you're okay with that, don't expect, moves like we had back here of like the 5 or 10x or whatever. What you're really doing now is you are in a grind, okay? What you're trying to do is accumulate, pick up the best projects at the cheapest prices, and wait for the market to pick up again. Now, if you're really looking to trade, come join our 30-day training or trading program, and I will teach you guys how to make money in a bear market even, okay? Again, not investment advice. I gotta cover my butt on YouTube. All right, so let me get through my futures presentation, guys. Essentially, I had done a little bit of research, even I think before this move happened, because I saw something that was happening in the market from months, right? I just didn't have enough time, nor did I have the data to back my wild theory, okay? So here's my wild theory, okay? I'm gonna explain to you guys. First of all, we have to understand what futures are, okay? Futures are, by the way, if I'm boring you to death, please shoot me a comment right now, and you don't want me to talk about this if you want me to talk about something else, because this is, going to take the next 5 to 10 minutes, and I'm going to explain to you how futures essentially help bring down a market, and, there's rampant collusion and manipulation that is potentially happening, okay? Let me see if I'm getting any more comments from you guys. Comments, complaints, anything. Let me know, okay? Shoot me a comment if you want me to talk about Bitcoin futures. All right, no comment. I'm just gonna start talking about it. Anyway, futures are basically, guys, first of all, they're a financial derivative instrument to either buy or sell the underlying asset on a future date, right? So what that really means is we're actually not trading the asset itself. So you're not actually, when you're shorting or longing oil or wheat, gold, stocks, or Bitcoin, you're not trading anything. You're essentially betting on the price to go up or down, right? And you have two options. You can long the asset or short. So longing is buy asset at X price on Y contract maturity date, and vice versa for short, okay? Bitcoin futures. So these can be done on the CBOE and the CME exchanges, so the Chicago Board Options Exchange and the Chicago Mercantile Exchange. CME is a bigger contract size, 5 BTC. CBOE is every contract is 1 Bitcoin, okay? Awesome. So let's get to it, okay? So what exactly is my theory, right? So since the future started, right? CBOE future started around, middle of December, and CME started a week after. And since then, we've seen a massive collapse in price. Now, obviously, this could, be just the regular market flow, right? The ebb and flow of the market. Market goes up, then it comes down, right? But why exactly was the timing of the future so perfect, and why do the other futures dates line up so well with the Bitcoin terms? Okay, so let's look at it. So first, let's see, let's try to make the connection of what exactly I think is happening from the futures market standpoint that is impacting the Bitcoin spot pricing, right? Spot, by the way, is the price of the asset itself, okay? Awesome. So why do futures matter to the movement in spot pricing? Well, my theory rather, is that, even if futures markets don't trade actual Bitcoin, these markets, right, the people who are trading in the futures markets could work with, the whales, the banks, the big hedge funds, investment funds, and traders to understand which way the market is being pushed and bet accordingly. Or they could actually push the market themselves that way too, because there's nothing stopping anyone from buying a bunch of, futures to short the market, and then buying a ton of Bitcoin on OTC, meaning over the counter, and market selling it to dump the price, right? And that meets their futures contracts. Okay, so to understand if there is a collusion of some sorts, you have to look at the setup of the market structure. You have to look at the upcoming CME and CBOE open contract and expiration dates. You have to look at something called the COT, which is the Commitment of Traders Reports, and volume indication as to which side may be next for the exploit. So let's go through that, okay? All right, so here's the CME futures contracts dates, right? As you can see, right near each date, there's a significant movement and a turn on the market, right? You can see a turn over here, longing over here, shorting over here, continuation over here, long, short, and now over here we were meeting it perfectly, right? August 31st, which is the ending contract date. We were essentially set up for a perfect short, right? All right, so did that happen? Okay, CBOE and CME contracts were set up for middle of August and end of August, right? And the Winklevoss twins, around end of July, they got their ETF rejected. Well, let's see exactly what happened, okay? So on July 31st, right? This is the COT report, guys. Okay, we had a lot of, from this Chicago Mercantile Exchange, we had a lot of short contracts being opened up, okay? So right around here, okay, that's where a lot of short contracts got opened up. And what about the CBOE? Same thing, right? 4,170 versus 2,567, right? So clearly, someone knew that, you know what, when this starts coming down, we're just going to short the market, set our targets, you know, so for 6,000 or whatever it was going to be, and we're going to take profits here, right? And same thing, the CME did the same thing, right? They shorted the market, as you can see, they short, right? 2,785 contracts, okay? By the way, so expiration dates, guys, they don't mean anything. You can literally buy the contract, you know, the day of, and if you have a target that's met by that date, let's just say, you know, 15 days before the contract expires, you can sell it then, okay? You take your profit and you're done. That's kind of how futures contracts work. Now over here, okay, this chart was taken, I think, September 4th or 3rd, something like that. And as you can see by my awesome hammer that I put up, I told y'all that, you know, 7,300, 7,400 was going to be the top. And, you know, as you very well know, that was the top right around there. September 4th is when we essentially hit the top, okay? So that kind of told me that, oh, where'd the chart go? Okay. There it is. September 4th, right? Right there. That kind of told me that, okay, let me look up the short contracts and see what the COT report says. Well, on August 28th, right? So this is about 4 or 5 days before the contract, 4 or 5 days before this big candle was dumped, right? We had a lot more shorts opened up in the futures. Look at that, right? 3,571 short contracts, clearly outweighing the longs, okay? And even the volume had stepped up in the CME, right? You can actually go on the CME website, CME group right here, look up Bitcoin, and you can see that, you know, the September volume had stepped up. But now they're starting to move over. They're going to start moving over to October or December contracts, okay? All right. But anyway, so what I was trying to imply is that, you know, there could definitely be some large-scale collusion that's happening between futures traders and the people who are, you know, buying a lot of Bitcoin and either dumping the market at the proper time to hit the futures targets, okay? You know, again, I think my data backs it. You know, even September 4th, right? You can look at this. You can look up this data by yourself, guys. If you just type in CFTC, you know, Commitment of Traders Reports, it's all, you know, readily available. And over here, this is the September 4th report, 2018, as you can see. This is the CME contracts report, right? Look at that. 2,354 short contracts open for Bitcoin. Let's look up the CBOE one. Let's see what the CBOE says. Again, 3,334 short contracts for Bitcoin, right? So that kind of tells me, guys, that, you know, the smart traders are clearly, I think they are essentially knowing which way the market is going to turn, or they're turning it at will to meet their targets, okay? Now, I know it's a wild theory, but, you know, again, it's just something that I'm still working into to pull in and crunch more data as time goes. And if I gather enough information month to month, you know, contract to contract, I will be able to definitively say that, you know what, there's obviously some sort of communication happening between the people who are, you know, running the CBOE or CME futures and the whales or the traders of spot pricing. Okay, awesome. Please check Fibonacci, Bollinger Bands, TradingView 1 day, please. Sure. Oops. Okay, Bollinger Bands right there in 2014, right? Yeah, so for those of you who don't know how to use Bollinger Bands, guys, they're not really predictors per se. They give you a range of how the price is moving. So let me explain, right? When the price is under the middle band and touching the bottom, the band is trying to tell you that, hey, this is, you know, the bottom of this range, okay? If we break through the band will expand. But for the most part, the band is telling you that this may be the bottom. And we now will start rising up. And as you can see, when it started touching the bottom band, we came up, met the middle, and then we started moving to the top. And once we got to the top, same thing other way around, which is once you meet the top of the band, you are due for a pullback or a correction. Okay, so once we met the top, came back down, didn't even blink at the middle band. Typically, you come down, meet the middle, hang out for a little bit, and then you either move back up or come back down. And this move right here, we came back down again. Amit, I actually don't think that the Bollinger Bands are going to be useful in 2014. But Fibonacci-wise, I already did a big Fibonacci session on this earlier in the video, so you can check that out. As you can see, these are the Fibonacci levels from 2014 and 15. And I told you guys that the 786 Fibonacci is clearly one to be looking at. And for Bitcoin, that 786 Fibonacci is right around the $5,600 level. So that is the level to watch. That's a level to break, if you will. Okay. And once we break under that, then it's free falling at least till the next support, which I think is somewhere around low 5,000s or high 4,000s. I can't remember. Yeah, actually, it's probably 4,800 bucks. Okay, awesome. Any more questions, guys? I don't know if I have a whole lot to talk about. I will do analysis on 3 coins. So list them out and I will do them. But again, no point in doing TA on, okay, Amit says it shows the middle, like we break last time in 2014, we went from 1100 to 160. Okay, so you're saying that the Bollinger Band, yeah, I mean, well, the thing is, Amit, the Bollinger Bands don't act, they don't just break like that. So basically, right, as you can see, the Bollinger Bands kept moving up, right? The price within the band itself, even when it was being corrected, was still at the top, okay? So I don't really know if that's a good way to look at it. I've been using Bollinger Bands for a little while, and I don't think they're the best price predictors, but they do give you a good idea of how the range of the price will rotate in, okay? GVT. All right, I'll look up GVT. I'm scared to look up alts because, man, they're going to get brutally murdered. I don't know. This is not my drawing. I don't draw like that. Okay. All right. So GVT is, wow, that looks like a reverse cup and handle, actually. Cup and handles go like this. Then there's the handle itself like that. And these break to the upside. Well, reverse cup and handles are just that, except they're reverse. So this is the cup, this is the handle, and this is the breakdown. Okay, reverse cup and handles are bearish. All right, that's kind of what I'm seeing right now. I would probably more than likely say that this is going to come down more. The level that you want to look at is the break of this and the bottom right here. So around like 16,000 satoshis. That is the area where you can consider that, okay, GBT might actually be on a move to the upside. Okay, but for now things just look largely bearish, guys. Unless you're dollar cost averaging, meaning that you keep buying on the way down as the price ticks down, don't go for small trades here and there. You're gonna get burnt in this market, and you're gonna start losing capital, right? Number one rule, that Warren Buffett always talks about is preserve your capital, right? Number two rule is grow it. So can't grow something if you don't preserve anything. All right. Do you post advanced warnings of when you will be doing the live stream somewhere? Yeah, Nathan, we actually have a Discord channel, and I told my channel about 15 to 30 minutes before that I will be going live. Our community gets daily Bitcoin analysis, our Advantage members rather, and I also post numerous updates for Bitcoin, and we also provide analysis on any coins throughout the day. If I find a good trade that I feel that the community can benefit from, again, not investment advice, they can take it. You can come join the community and you can see all the reviews that we have of people making X amount of percentage gains from it. Okay, awesome. What else? ADA, I will do that. ADA is the other one. Binance, yeah, bearish, not even a question. I mean, yeah, guys, these are levels that you either want to keep accumulating on, or you just completely ignore. I mean, where it's sitting right now is probably this level right here. The fact that it's hovering right around this level tells me that it has met this, previous resistance that, again became a horizontal support, and now it's coming back, with a huge circle around after 8 or 9 months. Okay, and for all I know, it may even go down here to the 600 or 700 Satoshi level. Okay. Sorry, I don't mean to be a Debbie Downer, but I've told you guys that the markets are pretty bearish, and unless you're dollar cost averaging or you want to come join our community and join our 30-day trading program, I do not recommend being a trader by yourself. You're gonna piss it all away, and it's not gonna be fun because you're essentially losing money to the people who are essentially buying it cheaply from you, buying your coins cheaply from you. Okay, awesome. Any more questions that you guys have? Can you do a quick summary of the future segment? Team Joey Rocket Cryptos. Hey man, so basically, Joey, I was saying that I actually think that there's a widespread collusion of some sorts between the traders in the futures markets and the whales and investment funds or institutions that are trading spot prices, okay, spot Bitcoin rather. And the way that conclusion came about was because I did some research into the COT data, the volume of the CME and CBOE exchange. I went through a lot of digging, to be honest, and I'm not just pulling that out of my ass. I honestly really did a lot of research to see the correlation, if there is any. And so far, it's fairly steady because, as I mentioned to people, few days right before the September 4th drop from 7,400, that the futures were stacked towards the shorts. And literally, 3-4 days later after I released my Bitcoin futures presentation, the market dumped. Okay, all this information is visible. You just need to, you need to know what to look for, right? That's kind of what I'm here for. All right. Would you dare to imagine if we go below 5K BTC, what would happen to these alts? I mean, I told you, Amit, 90% of these alts are probably going to go to zero, right? Or they may not go to zero completely, but they're going to be as good as dead. And, these projects that have raised ICOs, they're going to dump their Ether, they're going to dump their Bitcoin, and that's going to further accelerate the drop in both of those, respective cryptos, Bitcoin and Ether, that is. And that's how you are going to see capitulation. Because there's a ton of ICO projects that are just really clinging on to their Bitcoin and their Ethereum, thinking that the market's going to go up sooner or later. But markets will always test the pain tolerance of the patient versus the impatient, from the strong versus the weak. And, sooner or later, guys, you will see the weak hands, whether it be individual retail investors or whether they are crypto projects, ICO projects. Dogecoin for the win. Yeah, for real. Dogecoin is, man, that coin, I swear to God, is a kick-ass, coin. It just it always surprises me. Never ceases to let me down. Every time it comes back to these levels, it just starts rocketing, man. I just don't know the point of it, but clearly people like it. Monarch free coins. Yeah, let's get Snee to give us some Monarch. I kind of can't wait for real capitulation as much as it will hurt my portfolio. Bring it on. Get the fuck out, weak hands. I totally agree, Joey. Again, I've been screaming that we're in a bear market. One of our other analysts and I are good friends, Jordan, and he's also a fantastic trader, amazing trader actually. And he and I met around beginning of the year, and we had been saying that this is a bear market since I want to say February 24th or March or something, beginning of March I want to say. And we've been bearish ever since, and people thought we were crazy, but don't think I'm that crazy. Awesome. Any more questions, guys? I'm going to try to wrap this up here. I've pretty much gone through whatever I needed to talk about. Oh, one more thing, actually. Let me pull up my chart real quick. I had mentioned this to our community. Again, if you join our Discord community, guys, you're going to get daily analysis. You're going to get, our 30-day program, trading program, private, trader talk, which is basically our podcast, but you get to ask questions in it. So it's a live podcast, live YouTube stream. So yeah, so one more thing I wanted to bring up is, let me pull up the 1 hour chart here. So this U-shaped move, right, guys? I had mentioned this to our Cryptosomniac community. Okay, so back here in, August, so let me zoom into this. See that right there? It's the same U-shaped move, right? We were dumping, moved sideways, pushed up, and then consolidated a little bit, came down, moved up a little bit, and then came down hard, okay? What this does, this right here, is a artificially created short squeeze. But the market didn't really move that much. All it did was, squeeze a few shorts, and then the pressure from the bears held the price to this level. And then it dumped, moved sideways, gave some more hope, and then it completely dumped, okay? Now, if you look at that to where we are now, right? Let's see where we are right now. Daily chart. Wow, this chart's awful looking. Right there. Okay, so let me zoom in and change the time frame. All right, so you can see that the same U shape right here is created, right? See, market moved up, sideways, dumped down, moved up again, and it's going to go dump down harder if that fractal were to repeat, okay? You know, again, just join our channel and you can get all this kind of analysis, and you can ask me or the other analysts all these questions. That's pretty much all I have, guys. You know, thank you for joining me. I know I don't do these as often, but I hope to do more. Give me a thumbs up if you like my work. Come join our Discord community, and I will talk to you guys soon. All right, take care.